Hi guys. In stock markets, if you ask a question where the prices turns around, the answer will be very simple. Prices turns around when there is exhaustion of sellers or buyers. Here in this video, using order flow, we are going to find how to identify these exhaustion in buyers and sellers. Before we dive into this video, don't forget to subscribe to the channel and like this video. To understand this concept very well, you need to first understand in stock market there are two types of orders. One is market order, one is limit order. So in market order, what happens? You place a order saying that I need this much quantity, but you don't specify any kind of price in the market order. Whereas in limit order, you specify both price and quantity, how much you want to buy. So what happens when you place a market order? It just goes and executes on the opposite best available price. Whereas when you place a limit order, quite opposite happens. The price sits in the order book. Once a buyer or seller sells to you, the order will get executed, or else it will be cancelled by EOD. These are the two types of orders, and if you are a trader with a little of experience, you will understand what moves the prices is the market orders, not the limit orders, because these limit orders are sitting orders, as I said, whereas market orders, they just go and execute at the best available price. To make you understand this buyer and seller exhaustion better, let me give you an example. A person is running for 6 kilometers. The first 2 kilometers he had run within 10 minutes. The second 2 kilometers, that is the 3 and 4 kilometer, he ran in 20 minutes. And the last 2 kilometers, that is 5 and 6 kilometers, he took almost 30 minutes. So what is happening here is he is getting exhausted for every 2 kilometers. The same thing happens in stock market also. So because the prices are moved by these market orders, we look at these market orders. As the prices goes down, we look at the market sell orders. As the prices goes upside, you look at the market buy orders, how well they are executing at the higher levels. Let me take this example. If you are known order flow, you know that the left side are market sell orders which are getting executed at the limit buy orders, and right side are nothing but the market buy orders that are getting executed at the limit sell orders. So to understand this exhaustion in order flow, we look at this left bottom corner. Because the prices is going down, we are looking at the exhaustion of the sellers. So here if you look at 81 sellers, 238 sellers, good number of sellers are there. But what is happening as the price is going, if you observe 159, it has reduced, and it has again further reduced 148. And look at what happened here, 15. So it's almost from this 238, 159, 82 and 148, there was an attempt, but the prices closed above. But then here it became 15. So what happened? Sellers have almost got exhausted 15. And again there was a pullback here, 180, 26. Buyers were not there. But at the same time, you also track at the lower levels whether the sellers are coming aggressively or not. But look at this here, there is a 7 quantity, single digit number. So this spoke about aggressive sellers have almost dried up. So what happened next? Look at this, the prices aggressively went up. So at the same time here, 30 aggressive sellers, not much. So, and because the price is making higher highs, you look at the aggressive buyers continuously, you track them, 33, 78, 97, 84, 14. So what is happening? As the price is approaching towards the 50-day exponential moving average, buyers started thinning out, and then there was a small pullback. At that pullback, again buyers came in aggressively. As the price is breaking out this moving average, look at how the aggressive buyers came in, 282, 14. There was a thinning out of this number, 272, 100. And look at this here, it's 9, single digit. So this single digit tells you that sellers have got exhausted. Whenever you are looking at the sellers and buyer exhaustion, don't use it standalone. Try to incorporate this with along with the other strategies, so that there will be a double or triple confirmation. Let's take some other example here. I'm taking this here because the prices have moved down. We are looking at aggressive sellers. There are aggressive sellers at lows, 158, 104 and 28. So this lowering of number, it told us that sellers are totally thinning out. So prices made a higher high, and now because price is making higher high, you look at again buyers 12, 153, 158, 320, 141, 26. Now what is happening, as the prices started making a again pullback high, buyers started thinning out. So look at this. So this told us again there is a good possibility the prices might go down further. You have an imbalance here, prices closing below the imbalance levels, and it's a good entry area downside. And again there was a sideway market. The moving average itself acted as a good resistance, and look at here 443, 58, 106, 937 sellers, whereas on the opposite side 58, 37, 944. So aggressive sellers are there at lower levels, but buyers are totally thinning out. There was a entry opportunity here itself, you could have entered here. If you like this video, don't forget to subscribe to the channel and share this video to your friends. You can also go through my other videos which I'm attaching at the end of this video, and you can check my YouTube channel homepage. This is with understanding buyer and seller exhaustion in order flow, guys. Till our next video, guys, thank you, have a nice day.